XRP community watching every chart, every signal, every rumor with intensity growing daily. Spot versus futures ETFs becoming the biggest question in crypto right now. Whispers across institutional corridors echoing with one phrase: which ETF will truly matter? Markets buzzing with anticipation. Traders analyzing filings, on-chain analysts decoding the meaning behind every regulatory move, as the SEC shifts tone and language suggesting that both forms of exposure could soon reshape the XRP landscape. Futures ETFs historically arriving first with controlled liquidity and derivative structure, allowing institutions to dip their toes before committing fully to the spot asset, yet spot ETFs always seen as the real signal of adoption, the moment when actual underlying demand meets regulatory greenlight. XRP investors sensing that same pattern could be playing out again. The futures conversation a precursor, a testing ground for liquidity behavior, compliance tracking, and volatility thresholds, while the spot side represents the gateway to true institutional settlement and real asset accumulation. The debate now less about technical mechanics and more about what each structure says about the evolution of crypto markets. Spot ETFs tracking the physical token, requiring custodianship, transparency, and deeper integration with exchanges. Futures ETFs operating through contracts settled in cash or derivatives markets, often detached from the actual token but critical for speculation and hedging. XRP's entry into this conversation is monumental, because it bridges the utility of blockchain payments with the emerging framework of institutional finance. The approval of futures ETFs and other assets like Bitcoin and Ethereum paving the way for XRP's inclusion, yet analysts believe the timing of a spot approval would mark a paradigm shift, the day when liquidity, volume, and confidence converge. The XRP audience already witnessing subtle moves from exchanges preparing infrastructure, whispers from liquidity providers aligning custody networks, and financial giants analyzing how RippleNet data and XRP's on-chain metrics could inform price discovery mechanisms for ETF tracking. Behind the scenes, analysts argue that futures ETFs serve a limited purpose in adoption. They create exposure but not circulation, whereas a spot ETF directly integrates XRP with banking portfolios and ETF-traded funds, turning the asset into a legitimate allocation instrument, not just a speculative trade. Every crypto bull run has had its catalyst. Bitcoin had the futures and spot approvals. Ethereum had staking and ETF attention. XRP's next phase could arrive when regulators acknowledge its unique compliance structure and settlement use case. The reason the community cares so deeply about the distinction between spot and futures ETFs lies in what it reveals about maturity. Futures products signal testing, oversight, caution, while spot represents conviction, commitment, capital inflow. XRP's alignment with financial rails, regulatory compliance, and global liquidity makes it one of the few digital assets ready for both. Analysts point out that a futures ETF could be approved first, setting the stage for market conditioning, followed by a spot ETF once infrastructure is confirmed and price stability proven. This two-step process mirrors earlier cycles, yet XRP's integration with financial systems could accelerate the timeline. Investors sensing opportunity in the quiet buildup, the institutional whispers, the unspoken readiness, as traders analyze the chart. Support zones forming near 50 cents and resistance aligning near 68 cents. Sentiment remains cautiously optimistic. Every filing, every leak, every market rumor fuels new theories. Could Ripple's cleared status after the SEC case be the missing piece that unlocks ETF confidence? Could the framework for ETF approval evolve faster under new leadership, or will futures exposure test market appetite before the floodgates open? The emotional tension in the XRP community grows, years of waiting now converging into a period of rapid change. XRP story has always been about patience meeting inevitability, regulation catching up to innovation, and now, ETF speculation becoming the next frontier. For the XRP investor, understanding the core difference matters. Spot equals ownership, futures equals exposure. One brings adoption, the other brings awareness. Both however form part of a larger narrative, the institutionalization of XRP, each step reshaping its perception from a speculative altcoin to a financial instrument. Every move by Ripple or major fund issuers like BlackRock or Fidelity watched with precision. ETF filings analyzed line by line, market analysts drawing parallels between Bitcoin's ETF evolution and XRP trajectory. But XRP's case has a twist. It's not just a store of value narrative, it's a utility-backed, payments integrated, legally clarified asset, meaning the spot ETF could carry a different kind of weight. The global financial world is watching, not just traders, but banks, liquidity providers, compliance officers, all tracking the same data. The first futures-based XRP ETF would mark a soft entry, yet the spot ETF would rewrite history. Analysts argue that both could coexist, feeding different segments of the market, traders leveraging futures for volatility, institutions locking in exposure via spot for portfolio diversification. Every signal from regulators, every mention in policy papers, Every comment from Ripple leadership adding to the growing belief that the structure of ETF will define XRP next decade, not price alone, but the framework around it. The legitimacy, the confidence, in essence, the spotlight is shifting from price prediction to infrastructure prediction, from speculative hype to structural readiness. The XRP ecosystem maturing into something that regulators can no longer dismiss. Investors must decide which narrative they align with. Are they betting on futures-based speculative cycles or spot-based adoption cycles? The emotional and financial weight of that choice could define returns over the next few years, and for XRP holders who have endured the SEC lawsuit, the delays, and the suppression, this next chapter represents something much deeper: validation, vindication, and the beginning of institutional trust. The final question becomes not whether XRP will have an ETF, but which will come first, and how that sequencing changes market psychology. Will futures ETFs generate momentum, drawing attention but leaving investors waiting for spot clarity, or will regulators surprise the market with a direct spot approval, signaling a major shift in crypto regulation philosophy? No one knows for sure, but the tension, the energy, the build-up in this moment feels historic. XRP's road to ETF recognition mirrors its broader journey. Resistance followed by acceptance, misunderstanding replaced by integration, and now, anticipation turning into inevitability. Stay tuned, because by the time both ETF forms are live, the conversation around XRP will no longer be about if, but how big, how fast, and how far. The community must remain vigilant, informed, and emotionally grounded, because behind the charts, filings, and predictions lies a silent truth. XRP is evolving into the infrastructure asset the world's liquidity systems have been waiting for, one ETF at a time. As the countdown to potential ETF filings continues, traders refreshing feeds, watching every SEC calendar, noticing the pattern of futures ETF approvals preceding the spot counterparts. Whispers suggest that XRP could follow that same rhythm, but faster, because unlike Bitcoin or Ethereum, XRP already sits at the intersection of regulation and adoption. The RippleNet framework, the global partnerships, the clarity in court rulings, all forming the foundation for institutional trust, and institutions crave clarity. The futures market, though a powerful instrument, often serves as a playground for leverage, speculation, and short-term hedging, while the spot ETF carries the weight of actual accumulation, the absorption of XRP into long-term custody accounts. ETFs managed by asset giants like BlackRock, Fidelity, or VanEck, quietly absorbing liquidity, shifting supply dynamics, recalibrating price discovery. The narrative divides traders into two camps, one believing futures exposure will be enough to ignite the spark, the other insisting that only a spot ETF can trigger true adoption. Both arguments valid, both perspectives rooted in history. Yet the XRP case remains unique. XRP's intrinsic link to global payments means that every ETF approval carries a deeper implication. It's not just about trading access, it's about financial system alignment. Each ETF approval pushes XRP closer to traditional finance, closer to the narrative that blockchain isn't a disruptor anymore, but an integrator, and the ETF becomes the bridge. For traders mapping strategy, this moment is delicate. The market sits on the edge of clarity and confusion, institutions moving silently, retail speculators shouting loudly, analysts watching volume shifts, some XRP holders choosing to accumulate before any ETF news